Welcome back. Now for a check-in on the markets, we're joined by Evan Lucas from InvestSMART. Evan, thank you for your time. Now, the Aussie dollar certainly wasn't expected to get much worse, but it is actually looking pretty dire thanks to coronavirus. It
is. Look, I'll be honest with you, I actually think it probably will get a little bit worse, Annalise, in terms of where it is. It got down to as low as 64.62, sitting about 64.70. It's popped back up to just touching 65 cents. So it's a new 11.5-year low in terms of where it's going, but the momentum is to the downside, and the reason for it is over the weekend, the Chinese data, particularly their Purchasing Managers Index, was, as everybody's told you, I'm sure about it, is a record low for them. So at 35, that is an unbelievable level of contraction in Chinese manufacturing. There's been enough out there to show that, but it's not just looking at the state numbers. We do actually get the private numbers, so the Thyssen PMI numbers come out today. They were forecasted at 45, and that's exactly the same number that was forecasted for the state numbers. So they could also have a 35 number as well. And then midway through the week, we actually get Chinese trade balance numbers, and that will be astounding to see in terms of what happened in February. Expectations are for contractions of double digits in imports and exports for February. So it's probably not going to slow down in the Aussie dollar because we are so tied to that Chinese number, so tied to that Chinese economy. And that's what's going to make this week very, very interesting. It's not just the market on the equity side. How far does the Aussie fall as the Chinese numbers that are retrospective, let's put that out there, but they are very close to the month that's just been, really show how much China stopped because of Corona.
And we can see just the impact it's having in Australia. We've been told now it's almost a certainty we'll get a rate cut tomorrow, and could get even worse after that.
Yeah, and that's an interesting thing. The fact that you're actually saying we're going to get one. If you had a look last Wednesday, the probability of a rate cut tomorrow was sitting at around about 15%. Now, that was despite that obviously last Monday through Wednesday, the start of the really volatile weekend markets was already underway. On Friday, it got to a certainty, and that's really quite staggering in terms of how fast and how much volatility there's been, how much of an impact Corona is expected to have, because we haven't actually realistically seen physical changes in the economics yet, but we can see the forward-looking forecast that we've just talked about. So tomorrow, according to the market anyway, is a certainty. I'd have to wait and see what the RBA actually says. They may give themselves one more month. I would say April is probably locked in. Tomorrow, yes, the market says it's a certainty. Just a little bit more time maybe. The one that's really interesting is that there's been forecasts, particularly at somewhere like New Zealand. So the RBNZ also meets this week. And there are some really chunky forecasts out there with regards to what they could get up to. So Governor Orr is expected to cut rates. It's a question of whether or not he goes 50 basis points and then a further 25 basis points over the next 2 months. Some people out there are calling for that in terms of what would happen in New Zealand. They are clearly caught up with what's going on in China. Their milk exports have dropped quite significantly, and that's a major, major part of their economy. So watch central banks very, very closely. They are talking about synchronised global movements together. What that looks like is still a great question, but that's also part of this whole Corona story in terms of the economic side, how central banks sort of not only look at it from their own domestic economy, but how they do it for the global economy as well.
Certainly extraordinary times. Evan Lucas from InvestSMART, thank you for your update.
Thank you.